Good morning, this is Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is November 7th, 2022, and I'm going to go over your three threes for the week, and I've changed up the format a little bit for this week, so I hope you like it. First, we're going to go over the major asset classes, the performance, and our top three favorite ones, and how we are positioned in the short-term basis for both equities and bonds. And then I'm going to go over our top three market movers for the week, so let's jump on in.
Okay, let's go over the performance of our major asset classes on a weekly and on a year-to-date basis. For the week, we had the US dollar basically flat. We had our bonds down again from 1 to 2%, and the equities also were down from the week, anywhere from 1.7 all the way up to 5.6 for the NASDAQ. We did have a couple areas that were actually positive, and mostly that had to do with China possibly reopening from their zero COVID policy. And so that drove up emerging markets, Europe, gold, commodities, and Bitcoin. But on a year-to-date basis, we still only have two winners in the US dollar and commodities. Everything else is still deep in the red. Okay, let's go over the top three asset classes on a long-term basis for November 7th. We still have T-bills, US dollar, and commodities being our top three, which means defense is still on the field and our primary driver of this market. If we look just 1 year back in November 7, 2021, we had commodities, S&P 500, and the NASDAQ. So as you can see, we were on offense just a year ago, but right now we continue to be on defense. All right, let's look at our bonds on a short-term basis. And this is the aggregate bond, which we look at every week. We've had interest rates going up since the beginning of the year from 1.55 to 4.15 on the 10-year interest rate. When interest rates go up, bond prices go down. They do the reverse. And so you can see that the bond prices and their performance, they're negative, almost 16% year to date. And as you can see, we got out early, started to nibble, got back out in August 29th. And since that time, the bonds have even dropped another 6%. Would love to buy some bonds down here, but we've got to see a little bit more basing formation and then upturn into bonds. And so we shall see before we start to nibble again in bonds. On the equity side, however, it's been volatile, just like the bonds. We've had a lot of up and downs. We've tried to nibble a couple of times, two times actually, and both times we turned right back around and went back to defense. Well, as you remember from last week, we started to nibble at selective equities last week, and we're still positive on those, even though the market actually went up and then came right back down into that support zone. But however, we've got to pass these other resistance zones right here before we get the all clear that we can really start adding some additional equities to our portfolio. So, but for right now, we're just still nibbling on selective equities. All right, let's go over the top three market movers for November 7th, 2022. On Tuesday, midterm election results. If you haven't already voted, go out and vote on Tuesday. But this will determine the control of Congress and can spur moves anywhere from energy companies all the way down to cannabis stocks. And right now, the projections are that we're going to have a split government. And with the GOP winning the House of Representatives and possibly the Senate, there's a lot of key Senate races from Pennsylvania to Georgia, New York, Michigan, just to name a few, and Arizona. So we shall see what happens. Unfortunately, with mail-in voting, we may not know the results of some of these key states until weeks after. So we may not know. We may know the House, but we may not know the Senate come Tuesday evening. On Thursday, the second market mover will be the CPI reading for October. Right now, the projections are that we're going to go up 0.7 for the month, which is higher than 0.4 last month. But on a year-over-year basis, we have the CPI coming down actually from 8.2 last month to 8. So that's a positive. However, the key is in the core CPI. which is expected to actually go up from 6.6 to 6.7 on a year-over-year basis, on an annual basis, which it is still hasn't peaked yet, and that will be a 40-year high. So that's the issue that the Fed is trying to fight. So maybe we'll come in a little bit lighter, but right now the projections are we're still going up. So that's a problem for the market. Our third is for Friday. We'll have Veterans Day. So happy Veterans Day for those of you that served. It is a federal holiday. The bond market will be closed, but the stock market will be open. And typically when that happens, we see low volume. So expect a volatile day on Friday. Also, we have the University of Michigan Consumer Sentiment, a key barometer of consumer confidence in the U.S. And right now, the projection is coming in a little bit higher than last month at 60, and still it's above 50, so that's a positive moving forward. All right, that's it for this week. Thank you for joining us. Our next update is Monday, November 14th. As always, continue to follow, like, and comment, and we shall see you next week. Have a great week trading.